Looking ahead.
Alrighty, so this is something that I've been talking a lot about in the last couple of months, and so I thought it'd be a great opportunity to bring it up. In a lot of my trips, I've taken quite a few financial trips, so taking bankers overseas and looking at what does the future of financial services look like. And one of the trends that we've been seeing is that when banks are looking at the future, a lot of their competitors are not going to be banks. Right, we're seeing a lot of other companies getting into financial services and getting into the financial system in a really big way. Yeah. So, for example, Apple released their credit card recently. Google are looking into checking accounts. You've got Libra, which is like the pseudo cryptocurrency that Facebook and others are putting together. You've got Uber Money. You've got Starbucks, who's got this giant cash liability on their balance because of all the points that people are racking up. Yep. And so, what you're seeing is these large tech companies coming into traditional financial services and scaring the pants off these big banks who are worried about losing their power, right? Previously, all the transactions were kind of monopolized by big financial banks. And we're seeing now that if you provide a better user experience with a better brand, with like some sort of other incentives, people might be tempted to start moving out of traditional financial services and into these kind of tech giants.
Yeah.
Obviously, that's going to take a long time, and a lot of these tech guys are working with traditional financial service providers to make that transition happen.
100%.
But I was curious to hear your thoughts, Chad, on what you think the future of this looks like. Do you see a future where you don't have an account with a bank, but you have a Facebook balance with Facebook money in it? And what did that future look like for you?
Yeah, so I mean, to touch on our conversation last week, I mean, this is really worrying for kind of all of those concerned about privacy and that kind of thing. For me, I'm definitely stuck in the past in terms of traditional banks. However, that said, in the UK and in London, there are loads of fintech companies who are kind of challenging the status quo of what a normal bank means and what it does and its function. And so I've definitely switched over to those sorts of entities. But do I think I would be merging my social account with a bank balance? I don't think so, to be honest. I mean, if we look at the Google and the Apple example, so I believe they've teamed up with Goldman Sachs. They've got a consumer arm which was released, I think it was actually last year, kind of early bit of last year, if not the tail end of the year before, called Marcus. So where I basically saw this come about is in London, obviously, given the extremely low inflation rate, it's really hard to get money market type interest returns on investments. I mean, in South Africa, your inflation rate is incredibly high, and I think just on a sort of money market type account, it wouldn't be unusual to see sort of returns of 10%. Now, what Marcus did is they came out and advertised returns of 1.5%, and believe it or not, that is sort of the highest on a money market basis. So yeah, interesting for me that Google and Apple are teaming up with them. I think, as you said, in terms of the reasons that they're partnering up with some of these established banks is certainly regulation. I mean, I think the concerns for bank regulators are a gap in financial oversight. Having come from a sort of banking articles experience, what are your thoughts on this?
Yeah, it's something that is changing very, very fast, and the technology, as always, is way ahead of the regulation, right?
Yeah.
So I've been fortunate enough to see banking systems in a number of different countries, so I've got an interesting perspective on what it looks like on a global perspective. So if we look at Singapore as an example, Singapore is really leading the game when it comes to this regulation. In the last 12 months, I must get the number right, I think they've awarded 17 new banking licenses in the last 12 months, which is unheard of, right? Like normally these things are 1 or 2 a year, if that.
Yeah.
And so Singapore, their approach is basically saying we can become a sandbox. You come to Singapore, you test out your stuff, we see how it interacts in a Singaporean landscape, and then once you've got it figured out, then you export to the rest of Asia and the rest of the world. So that's one example of a country trying to let the regulation go a little bit and let it be a little bit looser.
Yep.
Where you look at other places like, say, the States or even South Africa, where it's very, very tight, there's a lot less room for innovation in that perspective. And so people are trying to do things outside of traditional regulation.
Yeah.
So there's pros and cons to each of those scenarios. I think that the whole cryptocurrency boom has kind of caused a little bit of mud in the water as well, because a lot of people get confused between what crypto is and what like fintech innovation is, and they're not
Yep.
always the same thing, and they're often not the same thing. So regulating cryptocurrency is very different to regulating a digital bank, for example. So I think that distinction needs to be more clearly demarcated, especially in regulation. And I think that for countries that are looking to push innovation, and they want to be the next New York or the next London or the next Hong Kong, they're going to have to take some risk when it comes to that. And like you say, like you're not going to know the implications of that risk until 20, 30, 40 years down the line.
Definitely.
So I think it's very interesting to watch. I don't know what the right answer is, but what I do know for certain is that the financial system in 50 years' time is going to look very different to today's.
Yep.
And how we're going to get there, I'm not sure.
Just out of interest, I mean, while we're on this topic, is Apple Pay and Google Pay and kind of Garmin Pay and all of those kinds of things, are they now beginning to be accepted in South Africa?
I think what's interesting about South Africa is that I think we were one of the first countries to have tap and go on our credit cards in the first place,
Yep.
right? So all of those payment mechanisms are available, and as far as I know, some merchants do use them, but tap and go has been happening here for the last 5 or 6 years.
Yep.
And so like when I went to the States and it's still very, very new, I was a bit surprised because it felt like I've been having it for 5 or 6 years.
Yeah.
So when you've got tap and go on your credit card, there's no real need for consumer to switch to an Apple Pay or a Samsung Pay just yet.
Sure.
So that's why I think it hasn't taken off in a big way here. Also, I think the brand strength here is a little bit weaker than some other places around the world, where if you're an Apple fanatic, you want to go and pay with Apple Pay and whatnot. But I think the fact that South Africa had tap and go credit cards so early in the game really kind of but slowed down the progress of Samsung Pay and all those kinds of things.
Yeah.
What about in London? What do you see in London?
Well, yeah, I mean, to talk about the benefit of having a card versus phone scenario, I definitely, I mean, myself personally, find Apple Pay to be extremely compelling, especially when you've got public transport. I mean, who wants to, take out their wallet, take out another card, when you can literally just, the phone's already in your hand, quickly double tap a button and, obviously authenticate it via fingerprint or your face or whatever the case is, and you through the gantry and that kind of thing. So, I mean, certainly moving over from SA to here, I definitely saw very quickly that, it's quite a bit more advanced, especially in terms of the fintechs. So, the sort of startups. I mean, already here, I don't want to kind of leave any out, but, we've got some fairly big ones. Monzo, which has actually got a fully fledged banking license. We've got Starling, Revolut. These are basically all digital banks that are, completely saying no to the sort of model of having actual, outlets where you can go in and do your banking. On the sort of back of that, they give you extra flexibility. I mean, certainly for traveling, one of these apps, for example, lets you hold multiple currencies at one given moment. You then get analytics on your spending on each of these currencies. There's one that can even automatically pick up your location, and when you're out of the country, activate a travel insurance policy. So we're definitely seeing some great innovation happening this side, and it's certainly going to be interesting to see where it goes to from here. I think something that I saw that was a little bit concerning, just to go back to our discussion last week, is the possibility that a Google bank or a sort of Facebook bank, I'm just calling them that, would give them an extra layer of information in terms of how effective their ad campaigns are, in terms of click-through and ultimately, finalizing that purchase. I mean, do you think they will actually be using this information, or do you think this is us again looking too deeply into this?
No, you're spot on. That's exactly the reason they're doing it, right? Their game is using as much data as possible to target those ads as best as they can. So that's the reason they're doing it. Whether the regulations are going to allow for it, or whether they're going to have to put some sort of Chinese wall in place, or they're going to try and find some way to avoid it. What it does is it gives these big tech giants another chance to establish their monopoly and make it very hard for a newcomer to compete, right? If you've got the banking information, the social information, your location data, etc., you know this person backwards. So it's a very, very tricky one. It's obviously, as you say, it's very convenient for the user and it makes your life a bit easier. And it's again what we said about last time. It's like the user experience versus the privacy that you're giving up. Yeah. And it's been interesting to see where they go with it. First of all, it's going to be interesting to see if they can succeed, right? Just because they open up these products doesn't mean there's going to be mass adoption, and they're still going to have to prove it in the marketplace. But if one of these things goes huge and gets some sort of network effect behind it and really becomes a powerful player, it's going to really terrify the rest of the banks and terrify the regulators, because it's going to be something in completely new territory.
I mean, in terms of that mind shift, how long do you think it would take for people like me who are thinking a little bit more traditionally? I mean, I say I'm thinking traditionally, but I have switched over to these fintech companies. For me, the next step being, as you say, having a sort of Facebook or Google bank account as well. I mean, how long do you think that lag would take? And do you think the banks should be worried certainly in the next couple of years, or do you think it's a longer term question?
I think it's a longer term question. I think that people are often over optimistic about how quickly these things change.
Yep.
When you're talking about people's money, it's one of the parts of their life that they are most conservative about. They're most resistant to change, right? If you're going to change your messaging app, you'll change in an instant. If you're going to change your social platform, you'll change in an instant, right? Your money is very, very dear and very important to people, and so it takes a while to change that behavior. That being said, if you look at the millennial generation, the generation that we're a part of, we tend to change much quicker than our parents did. Yep. And so you wonder if the generation after us, if they grow up with this fintech and they grow up not having those preconceived ideas as to what a bank actually looks like, they might be the ones that drive that change. And we might be the old fogies sitting there thinking, why are these kids giving up all of this information, right?
Yep.
And so I think it's not our generation it's going to be the one that comes after us. And what kind of banking systems do they grow up in? And how does that shape the way they think about their money?
I think the other thing here is, what does that actually mean for your credit record? I mean, traditionally, basically, the longer you stayed at a bank, you're seen to be more reliable and to be more trustworthy. Do you think we'll maybe see some changes here with all of these quick switches and as you say, increasingly becoming less jump, kind of less cautious of jumping? Do you think we'll see changes in something as important to consumers as a credit record?
I think so, and I think we're seeing that shift already. A lot of the big fintechs that I've managed to meet with over the last couple of months are in the credit space, and all of them are trying to unlock new ways to assess someone's credit. So how do you use new data? How do you use other data? Previously, you'd use your proof of residence, your payslip, your kind of traditional documents that prove a certain thing about you.
Yep.
I've seen a lot of companies that are trying to do weird and wonderful things with all sorts of data when it comes to your emails or the way you message or the way you handle your phone or the way you drive and yada, yada, yada.
Yep.
So I think we're going to see a lot of innovation in this space, especially as there's still a huge portion of the world who's not in the traditional financial system because they don't have those stable paychecks or they don't have the documentation or they don't have access to a certain banking infrastructure.
Yeah.
So I think that the way of assessing credit has to change to keep up with the world and keep up with how people are moving from job to job and bank to bank and yada, yada, yada. And so there's lots of opportunity in that space to become a third-party provider to gather that data, analyze it, assess it, and then provide some sort of rating that a financial institution can take seriously.
Yep.
So I think we're going to see a lot of change there, lots of innovation I'm seeing in the space, and so I'm quite excited about that as an opportunity. And we'll have to see what that does when it comes to how banks think about their consumers.
Fascinating. Must be absolutely fascinating being in that space and actually seeing how it's changing and all of the new opportunities that people are actually grabbing by the horns. So yeah, I mean, if that sounds like you, certainly get in touch with Barry because he's definitely in the space and has great information on that. Should we move on to the next one?
Let's do it.
Across the pond.